Okay, everybody, it's me, Gregory Mannarino. You are not seeing things. This is the third video that I am doing today. I want to get this out for a few reasons. Number one, there's a lot of people that are afraid here. I understand that. But I'm going to say it yet again. If you are in this market playing with money you cannot afford to lose, you're doing the wrong thing. All right, that's number one. Number two, you always have to look at the bigger picture. Number three, you have to be willing to set parameters for yourself and stick to them until something changes. For example, let's just say you are someone that just flies by the seat of their pants, and with every movement of the market, you are changing your perspective and switching investments around to this and that. You're going to lose it all within a relatively short period of time. The steady players are the ones that make it through every kind of market, bull markets, bear markets, and everything else in between. You understand? I want you to understand that right off the bat. Okay, so let's talk. On Friday, when we had that like 1,000 point sell-off with regard to the Dow Jones Industrial Average, all the major indices took a big hit. I explained at that point that I believed it looked like the S&P 500 was going to retest its recent low. That was 4150. Right now, we're at 4175. We're a breath away from 4150. So what does this mean? Okay, I explained in that video that if in fact we broke below 4150 with regard to the S&P 500, we would have to reevaluate things. Okay, now I explained in the video I did earlier today, for which if you have not seen that, I would strongly advise you to watch that video. There is a link in the description of this video. I covered a lot of things there. We got a bunch of warnings today. A couple were pretty profound. One of them from a billionaire investor who's explaining that we're dancing on the Titanic, and it's kind of an interesting perspective on things. Warnings from the World Bank, warnings from the IMF, warnings from Morgan Stanley yet again, every kind of other crisis that they are throwing at us right now. So with these things in mind, investors, traders, speculators, because that's what we do, we always try to stay ahead of the curve. Sometimes we make really good calls. Sometimes we make bad calls. That's just the way it is. And that's why it's important to be in a lot of things. Just as a real quick example, if you watched the last video I did, there's a lot of people that are taking shots at me for making bad calls on the banks. Okay, look, they have not performed well, and I have said that. But these same people really should be pointing out, Greg was or has been correct on, let's see, LMT, NOC, KO, MO, IBM, PDBC. There's a whole bunch of them that I have made very good calls with as of late. But no, you will not hear that. You will just hear about how wrong Greg is about the banks. Look, I am not right 100% of the time, but I do try to give it to all of you as straight as I can. I am not holding a gun to anyone's head to do anything I am saying. I am explaining what I am doing here, and I am in all these different positions. You can see them right now, right on my website, traderschoice.net. Judge for yourself the performance of them, not just the stinking banks, okay? Whoever said on earth that Greg Mannarino was just invested in banks? You got to be high as a kite. You got to be spread out. You got to be diversified, all right? And this one part of your portfolio doesn't do so well, the other part probably will. And, look, again, looking at this market here, we're not just attacking it from an equity standpoint, that is, from a stock market standpoint. The bigger picture is understanding that we're in a debt hyperbubble. And with that said, we're in the right spots, understanding that things are changing rapidly. When anybody makes a call on the market, you, me, whoever else, they're looking at information that is subject to change down the pike, because who would have predicted they were going to shut down the global economy from a virus? Okay, I always tell you, be ready for anything. They're going to do things you can't believe. Who would have predicted that there's going to be that this war would unfold right now, or they're going to shut down the, supply chains, or wedge a ship in the canal to prop up crude oil, whatever they got to do. This whole thing is constantly changing. There's all kinds of dynamics that are going on here. Now, with that said, again, that's what I think separates the men from the boys. If you're fixated on a pathway and you're unbendable, well, that's a problem. For me, I am not unbendable, but you got to set parameters for yourself, and you stick to these things, and then when things change, you change with it. Period. The end. You understand? So that's how the steady players win throughout the markets, throughout the years. And that's where you're going to see a lot of people, oh, I used to be on Wall Street. Oh, I used to do that. Yeah, because the used to be is because they don't understand that markets are very dynamic and things change. And at the same time, maybe they're changing too fast. You got to stick to your guns until, again, you see things that you believe are going to change your strategy. Right now, there's still nothing out here. Again, I will remain not just in the banks, JP Morgan, Goldman Sachs, Bank of America. I'm also going to remain in LMT, NOC, MO, KO, IBM, PDBC, others that I have listed on my website, tracechoice.net. Okay, some of these positions have done very, very well, while some have not done so well. Anyway, with that said here, if we see the S&P 500 drop below 4150, and we are just about there now, and we don't rebound off of that, then again, we're going to have to say to ourselves, what are we going to change moving forward? Are we going to dump all of our positions? Or are we going to hold the ones that are performing well? Because they're going to be, not the whole market doesn't drop when the major indices fall. If the whole S&P 500 falls, that means that does not mean that every stock within the S&P 500 is a loser. You understand? But there are those that are going to convince you that that's the way it is. And they want you to see things in a certain perspective. They have an agenda. I think you all know that. Look, Greg Mannarino has a lot of enemies for whatever reason. All I'm trying to do is help people. I'm giving people my best advice. If they don't like it, they don't need to follow it. What I always say, do your own research, okay? And don't expect me or anyone in this world to be right 100% of the time. There's going to be times where things just go the wrong freaking way. Period. The end. I think this is all pretty much straightforward information here. But the reason why I'm doing this video blog is, number one, I failed to mention this on my last video about 4150. I think there is a retest underway, as I said, after Friday's sell-off. And then today, when we got, this threat of nuclear war, that really hit the market. There's no doubt about it. If, in fact, something like that were to happen, even a tactical weapon, I'm not talking about, one that's designed to wipe out an entire city. I think just the fallout from that, no pun intended, would hit the market. And I think it would hit the market very, very hard. So, but with that said, again, realizing that the bigger picture is not going to change. We are eventually going to get a massive sell-off on that debt market. That's going to put enormous pressure on the stock market, way more than we are seeing right now. This is child's play. And, people are getting all bent out of shape about it. It's nothing. Nothing. I've explained to all of you, we don't even know where the bottom is. The Dow Jones Industrial Average, the bottom could be 6,000. It could be lower than 6,000. Why 6,000? Because that is when the Federal Reserve jumped in here with QE1. No one knows where the real bottom is. It's a bottomless pit just about, okay? Understanding these things is important. You understand? I think so. But again, being hedged, being in risk-on assets, the market, and risk-off, simultaneously gold, silver, platinum, palladium, and yes, in my view, cryptocurrencies, because I believe the market cap is going to balloon in cryptos once we get that implosion in the debt market. You're set up. You are set up fine. So don't listen to the crybabies out here. Just laugh at them. All right, these are people that shouldn't be in the market. They probably don't even own a single stock, but they're willing to call me out because I made a bad call or what they perceive as a bad call on X, but they won't mention, ABC doing well. No, because they got to make Greg Mannarino look bad. Good luck doing that. Okay, I've been out here for over 10 freaking years, and I've kept people on the right side of this for the vast majority of that time. Anyway, all right, look, I just want to get this out here with regard to the S&P 500 retest. Is this just a retest or something more? Look, I got your back. I will keep on top of it. So stick around, and we'll just and try to enjoy the ride. What can I tell you? All right, I'm out of here. This is really it for today. See you in the morning.